Monday 31st of July 2023. We're looking at the dollar index for trade setups using the M15 Bollinger Band break. So let's go over the conditions. Condition number one, only trade in one of the kill zones, either London or New York, and that's represented by these white horizontal lines. Number two, we need an M15 close at or outside a Bollinger Band, and that occurs here. So our first setup, potential setup of the day, occurs at the close of the 7:15. The third condition is we need a break of 1 minute structure. So let's go have a look at this. So this is dollar index on a 1 minute. So we said from the close of the 7:15, that brings us to around 7:30. So you're coming to the charts and this is what you're seeing. You're somewhere around here. Structure is up here, okay? And we do get the break of structure to the upside. I wouldn't take that. I'd wait for something more obvious like that. Okay, so we've had an up close candle. We've broken structure now. Here's the issue. This blue line here is your New York midnight open. Price is so close to New York midnight open, it doesn't make sense to go looking to long this now. Why? Because this price, this level is very reactive. Very often what can happen is price can come and touch it, reject from it, and then that launches the big move down for the morning. So based on this, I wouldn't go looking for trades on this setup. Although you can see there was a decent amount of movement in it. But by the time you got the setup on the 1 minute, price was already up here. So the bulk of the move had already been made. So that's setup number one on this system. Now there's a big move down in London, which you cannot catch if you're waiting, if you're using only this system. If you're trading this on an M5, you have a very clear and nice setup as an Asian range fake. Price wicks above the Asian range high, takes liquidity, and immediately comes down here. Okay, but again, it's better not to trade from here because you want to see what can happen with the midnight open. So we didn't take the trade up because we thought possibly price might bounce off it and go down. Now we're not taking the trade short from here, but because price could bounce off it again and go up. You have to wait for something more obvious, and the more obvious trade is when price trades through it, back to it, then rejects from here. Okay, so the entry isn't quite as good as getting it from up here, but this is the safer trade to take. Okay, moving on. So that was London, gave us one setup, which we didn't take because by the time we got it, it wasn't good enough. Then we don't trade until the next kill zone. Kill zone opens here, price immediately comes up, reacts off this midnight open, closes. Well, so no, leave the midnight open. Price comes up, we're in a kill zone, closes outside of the Bollinger Band. Okay, so as soon as that happens, you go straight to a 1 minute and you look for your break of structure. So this is the London, and then we come to New York here. Okay, so this is our break of structure here. So this break of structure coincides exactly with the New York Open. So in this instance, it's okay to take this trade. Why? Because as soon as when price goes below it, it comes in a very obvious way, like it's reacting or it's rejecting away from that midnight open. So we have the narrative now that prices come up to midnight open because of the time of day as well. Remember, it's New York, so the New York traders want to get their price as good as possible, which is New York Open. We've seen the clear reaction away. So from the close of this candle, which is the 131 candle, we can start looking to buy the dollar crosses. Okay, so first let's look at the Aussie dollar. You'll see that this was the time So from the close of this candle, we should have been looking for longs. There was a great movement in there, 30 pips in there. However, this isn't a correct setup because none of these candles closed anywhere near the bottom Bollinger Band. That doesn't mean you discount it out of hand. However, you have to compare the options available on the other pairs before making a decision. So this is the euro dollar. So euro dollar slightly better. Why? Because we have had a wick close below the Bollinger Band. So that signals a potential rejection and a move to the upside. And you'll see there was a move to the upside. It wasn't sustained. And you could make an argument that minor liquidity was taken here, but not really, not session liquidity, and definitely not the day liquidity. So this was the Asian low is intact, London low is intact. Okay, so between the two of them so far, euro seems like a better setup. This is the pound dollar. Pound dollar of the three is the best setup. Why? Number one, we've also had a close below the Bollinger Band. Number two, we've taken out London lows and Asian lows. Well, London took out Asia, but this is just a very clean, obvious liquidity take. So of the three, this is the preferable trade. So from 130, we can start looking to long the pound if we get a 1 minute break of structure. So this is your New York Open. Okay, so that's 130 there. We're just coming up to take this high out. It moves through it very forcefully. You see, it was a great trade. From bottom to top was fantastic. The only problem is there's no setup on the 1 minute. We never get the pullback. Okay, and this is the most aggressive entry that you can take. You don't want to chase price up. So the most aggressive entry you can take is a tap back to this 1 minute high, and especially considering you've got these fair value gaps here, you definitely wouldn't want to chase price. So unfortunately, although everything about the setup is great, you don't get the entry. Okay, so just to recap, all in all, it wasn't a great day using this system for your entries. Why? Because although it gave us technically good signals, if you're following the rules step by step, so for example on the London one, you wouldn't have taken the entry, so you wouldn't have lost, but it didn't give you an actual entry opportunity if you were being prudent, because the signal didn't occur until you were so close to the New York Open that it wasn't worth taking that trade. If anything, you'd have been better off waiting for a reaction from the midnight open down to follow that and continue that down. But that would be trading a different system. And then we get another excellent setup in New York, but price moves so quickly that we don't get the setup, at least not on the pound yen. Now you could go looking for entries on the euro and the Asian. However, that would be hindsight cherry picking, because of the three setups, this pound was the best. And so, I mean, it wasn't a disaster, because on the London one you wouldn't have taken the signal, so you wouldn't have lost anything, and on the New York one you would have put a buy limit, which also never would have triggered, so you just wouldn't have made any money this day.